Hello guys, we have seen in previous lesson why the stock goes up, and we have seen that there is only one action, which is buying. It means there is a demand for that stock, either mutual fund or big guys, and then other people join the trend and you see the trend coming up and making a big trend. This is why the stock goes up. In this video, we try to see the opposite. Why the stock goes down? When you say the stock goes down, here we mean the price of the stock or the company going down. In this, we have two actions. Understand that there are two things, two actions happening at the same time. Now, there is a selling pressure. It means a mutual fund is selling. Understand that a mutual fund will not sell in one day because he has millions of shares to sell, and it will create a very easy target to day traders, because day traders, they follow these big sellers, and when they see the stock is going down very quick, they scan the market and they find this kind of stocks and they go and they just go and short sell the stock. And this is the second action. For those who don't understand what is short selling, what does it mean? It means the trader borrow some shares from the broker and he sell them, and when the stock goes down, he will buy them again, or it's called to cover up. They buy them again, they give them to the broker, and they have the profit. It means it's the opposite of going long. It's going down. But some traders, they do, and they make a profit like this, and this is called short selling. Now, short sellers, it can be swing trader, it can be day traders. When they see the beginning of the first action, which is a mutual fund or another one who has a lot of shares to sell, they see that the stock in the morning is going down so quick, so they jump in and they sell short. If the stock goes down, and it will, they will make another pressure on the stock, and the stock goes so quick down. That's why you see when the stock goes down, it goes quicker than it's going up. Most of the time you can see it. Now we have two actions. One is selling off. A lot of people are selling also. Those who own the stock, they see the stock is going down, they put stop loss, and all the stop loss are triggered and the stock is going down more and more. Second kind of traders, day traders or swing traders, what they do, they sell short the stock. For those who don't sell, for example, an investor, okay, he doesn't sell for 10 years or 20 years. So they borrow his shares and they sell them in the market when the market is going down $1, $2, $10 or $5, whatever, for one day or for many days or weeks, and then they will buy these shares again and they give it to the broker. So the investor is always having his shares, but understand that the stock has been going down for long, so he will be losing a lot of money. And this is the two major actions of the market, why the stock goes down. And in other terms, if you see it in economic basics, it is just supply. Supply, what does it mean? A lot of people, they want to sell at the same time. Okay? If there is anything that it is sold and a lot of people are selling the same thing and it has no good value, its price will go down. You see it in the market, and maybe you understand it if you go to the market and if you see a lot of things are provided. Most of the time the prices are going down for this product, okay, because it has no big value as before. And this is just to simplify things, to give you the reasons. Okay? Now, speaking about the reasons, can you give me what are the reasons of hundreds of people or thousands of people who sell the stock? You will never know why these people sell. Okay? Because the company is doing good. There is no news in the company. And this is, you understand that the reasons is personal for each trader, for each investor. It's personal, it's a secret. For example, right now, I go to my shares, I have Facebook or whatever, Twitter or Apple, I just sell them. Okay? Do you know why I sell them? You will never know. Okay? And what about thousands of people owning Facebook or Twitter or Apple or Google or any other stock? Can you go to each one and see why he sells his shares? You can't. So a lot of beginners, a lot of intermediate traders, and even some who are involved in investing, they are always asking why the stock goes down, why, what's the reason? There is no reason, because each person has a reason. There are thousands of reasons. You can't know the reasons, so stop searching for the reasons. Try to focus on yourself. Okay? You see the stock going down. There are thousands of people who sold the stock, so you will never know why. So either you exit with a small loss, or you stay with the losers and you stay 1 week or 2 or 3, and then you lose a lot of money. And then you begin hoping that the market will go up for you. And this is what all the beginners do. It means hope. In the market, it's business. There is no hope. There is no luck. The market is going down for that stock. It's over. For example, I will just give you a simple example. Twitter was $74. Now it is 17. Okay? It is 17 in these days. So if you bought it at 74 before, you bought it at 74 because it was going up, everything was good, and you wait until now and it is 17. You become the biggest loser in the stock market. But if at 72, 73 or 70 or 71 you sold your shares, you have a small loss and you have all your money to buy other stocks, is better than to wait and to have this problem. That's why you will never know the reasons why a stock goes down. Because if you go to the company, you find it's fine. Facebook is doing good. There is no problem with Facebook, but the stock is going down. So, what's the reason? It means there are some people are selling. It means it's something real. There are people who are selling. That's why the price doesn't go down because just by magic it goes down. There are people who are selling because all this is math. This is the math that I speak in one of my videos. It's called Training is Math. It's not magic. Everything in the market is math, is numbers. That's why when you go to stock market, you find it all numbers. Something goes up, people they make money. Something goes down, people they lose money. That's it. There is no other thing that you can search, or you go online search why. Even if you know why, what's the deal? It means meet your friend sell his shares He has a profit for 1 year and then he sell off. So what can you do? It means you can stop him, and you will never know when another stock the mutual fund will sell. So this is another reason not to search for the reason. It means if you can't know what will happen in the future. So what you should do, you should have strategy to buy stocks, have strategy to exit, have strategy to follow the stock. And this is all this what I teach in my training levels. Okay, so we stop here and we say that there are two actions when a stock goes down. One action is when a big guy like mutual fund is selling, and other people will sell also. And there is the second action which are called short sellers. It means people, they borrow shares and they sell them and they cover back. It means they buy them again, give them to the broker, and they have the profit if the stock is still going down. These are two actions. If you want to make it simpler in economic basics, you say it's just supply. There are a lot of people selling, the stock will go down. That's it. You don't search for any reason. Okay? So thank you very much for watching this video. If you have some questions, please put your comments on this video here. And you can use my private email here on the top of the description, which is called istockmoney at yahoo.com, and you can send me an email and we can go and answer your private question. Thank you very much.